Hey, what's up, stock compounders? Brad here. So today we're going to look at the 10 most popular stocks on Robinhood from the last week. And the way I do that is I use robintrack.net. And we can see, how many accounts either added these stocks to their Robinhood accounts or sold them off. So we're only going to look at the buys today. But you can see here, Topps and Ford had a bit of a sell-off in the last week. But we're going to focus on these green numbers here. So let's take a look at the top 10, which I already imported into this spreadsheet. So the top 10 stocks on Robinhood in the last week, we've got Apple at number 1, Tesla, Moderna, which is a pharmaceutical company, Microsoft, Antero Midstream, which is a natural gas production company, Rocket Companies, digital solutions for mortgage and loan products, and that recently IPO'd, so that's a pretty new one here. Trevena, I believe, a pharmaceutical company at number 7. iBio, a biotechnology pharmaceutical kind of company. NIO, which is a Chinese high-end electric vehicle maker. And then finally, to round out the list, we have Amazon. And we all know Amazon. So let's take a look at these through the lens of these different filters that I apply to decide if a stock is worth going deeper into or if it's just not worth spending any time on. So some of the filters I like to use, we've got price to earnings ratio, which is an indication of how much we have to pay today to get, what earnings are we going to be getting for a partial ownership stake in the business compared to what do we have to pay today for that ownership interest. And you can see some of them, the ones that have an X, don't really have any earnings, okay? So we got super investors. This is a really important one. And of course, the last couple of days, I've been covering what super investors have been buying in the second quarter of 2020. So you can see how many super investors own these companies. And typically, the more super investors that own a company, the more great investors have vetted that company as a good investment. But keep in mind, a great company doesn't necessarily mean it's a great investment. You also have to consider at what price you can buy that equity interest in the company. And of course, we have earnings yield and return on invested capital. These are two metrics that Joel Greenblatt uses. Earnings yield to determine how cheap a stock is, and return on invested capital to determine how great a business is. So when you have that combination of cheap and great, that tends to be an awesome combination in terms of good investments. So we want to look at both of those. And then we got VIC, which is Value Investors Club. And this is a site that was created by Joel Greenblatt as well, who developed this magic formula, which uses these criteria. Now, Value Investors Club is where, you can submit investment ideas. And, basically, if Joel Greenblatt would have given that investment write-up an A+, then the investment thesis gets submitted or it gets accepted and everyone can look at it. The public can view those investment ideas. So if an investment idea is on here on Value Investors Club, it means it's a very high quality investment write-up. So it's an awesome way to kind of learn about a company through the eyes of a great investor. So you can see which companies have investment write-ups. And then this Q2 activity, this is something I'm adding specifically for this Robinhood weekly session here because I looked at all of those 13 Fs in the last couple of days. So I wanted to see, of these companies where super investors own them, what kind of activity happened in the second quarter. And that can give us some insights in terms of, is it a good buy now? Are super investors selling? What's happening recently? So let's go through this. Apple. So, Apple has been on this list for the last number of weeks. I think Apple is very expensive, particularly how it's been priced over the last couple of years. It's much more expensive than it has been over the last 5 years. You can see earnings yield 3.3%. That's quite low. Obviously, it's a great business. This is a very strong return on invested capital. But typically the price to earnings ratio for Apple has been somewhere in the like 12 to 15 range, and now it's 35. So it's kind of 3 times more expensive than kind of the recent average of price to earnings ratio. And you can see none of these 11 super investors that hold Apple bought in the second quarter of 2020. There was a little bit of selling, but mostly it was just holding. So another indication to me that Apple is expensive right now, the fact that no super investors are buying recently. Tesla. So there's only one super investor that owns Tesla, and he sold off 83% of that position in the second quarter. So that to me says Tesla is very expensive compared to intrinsic value. Obviously, it's just one data point with this one super investor. But you can see here, Tesla has just recently started to show positive earnings. But you can see they if you look up the earnings per share for the last 12 months, it's about $2 per share. So when you look at, you have to pay over $1,600 for a share of Tesla stock, and you're earning $2 on that, you get a price to earnings ratio of over $800. So very expensive. There's a lot of very high future expectations built into this current price. There is a write-up from Value Investors Club from August of 2019, which is just a year ago. And in that write-up, the price was $234 per share. So it's gone up 7 times in the last year. So to me, Tesla is, very overpriced. It's very expensive right now. But, it seems like we're in a full-on electric vehicle bubble at the moment, and Tesla has been the beneficiary of that bubble. That doesn't mean I would short Tesla. I don't short any stock because the price of a stock, and there's no laws of gravity that say the price has to come down in a given time frame. It can keep on going higher and higher. So that's the risk you run when you short a stock, is that you could go bankrupt. You could keep getting these calls to put up more collateral as the price continues to rise. So shorting just doesn't have the reward to risk ratio that I need to have in an investment. But it seems quite expensive. Next one, Moderna. I don't really have any thoughts about Moderna. It doesn't check any of my boxes. There's no earnings. Currently, the company is losing money. No super investors own it because it's losing money. There's no earnings yield or return on invested capital. There's no Value Investors Club write-up. So I have nothing really to intrigue me about Moderna. So I'll just move on to the next one. Microsoft. There was a write-up 2 years ago. It's about a double since then. I think it was $108 per share 2 years ago. So it's approaching a double. Seems very expensive to me. So many super investors own this, guys. I think it's like the number one stock owned by super investors is Microsoft. So clearly a great business. And there was actually mixed activity in terms of super investors buying a little bit or selling off a little bit in the second quarter of 2020. I was a little surprised to see that it was mixed. I figured there would be more selling than there was buying. But so, potentially a case to be made there for adding some to your portfolio. If that's something that's intriguing to you, you might dive into this a little bit more. But to me, it's very expensive. It kind of reminds me of the Nifty 50. You guys are probably way too young to know what that was. But the idea was, I think it was in the 70s, there were, a handful of companies that people thought, okay, we're going to buy these at any price because they're such great businesses. And that didn't work out so well because, like I say, in every one of these, a great business is not a great investment at any price. The price you pay for an asset really dictates what your future returns are going to be. If you pay too much, even if it's a great business, you're going to have diminished returns. So that's where I see Microsoft and Apple right now. Clearly great businesses, but they're just too expensive. So I'm going to wait on those. this one is really interesting. Antero Midstream, natural gas producer. So there was a write-up from March of 2019, which is a year and a half ago. The price was $12.80 per share. So it's come down significantly from there. The price to earnings ratio, pretty compelling at 13. Earnings yield approaching 9%, which is pretty strong. There is one super investor who owns it, and he added 139% to this position in the second quarter. So big buying activity in the second quarter for Antero Midstream. So if there were one company on this list that I was going to dive deeper into, it would be this one, Antero Midstream. So check that out if you're interested in kind of natural gas or energy plays. Rocket companies, like I said, this IPO'd recently, doesn't check any of my boxes, so I'm going to pass. Treverna, I believe is what this one is, a pharmaceutical company. Again, doesn't check any of my boxes. It's losing money, so I'm going to pass. iBio, same situation, losing money. I just have no interest in buying a company that's losing money. It's a risky investment from my perspective. NEO. So NEO was actually covered not too long ago by another YouTuber that I follow. What is his name? I'm forgetting his name. Hyperchange. Okay. And he seemed to think NEO has a reasonable potential of being kind of the Tesla of China. So, from as far as I'm concerned, I can wait to buy NEO until it's showing kind of positive earnings. Right now, it's still losing money, but it is getting closer to a point where it's starting to make money. It's losing less money from quarter to quarter, which is promising to see. There was a short write-up for NEO back in March of 2019. The price then was $5 per share. And shortly after that, it went down, I think, to about $1.50 per share. So this was actually a winning investment write-up on Value Investors Club. But things have maybe changed a little bit since then. I'm certainly not a buyer until this company starts to make money, because it's very difficult, especially with a car company, to go from losing money to scaling to a point where you're consistently making money. So I think NEO has a long way to go, but they are showing promising progress on the path to productivity, or profitability, I should say. So I'm going to watch NEO as we go along, but it's definitely not a buy for me at this point. But this is kind of the second most interesting play on this list behind Antero Midstream. And finally, we have Amazon. And like I said, Amazon, clearly a great business. 16 super investors own it, which is the second most on this list. But you look at this price to earnings ratio, Amazon is so expensive. There is so much optimism built in to the price of Amazon that I can't come anywhere near to justifying paying $31.47 for a share of Amazon stock. There was a write-up from March 2020. I think the stock price was around $1,785 per share. So we're approaching a double in just the last 6 months or so. And I was surprised to see there's some mixed activity in quarter two from super investors. There were some super investors that added Amazon to the portfolio, some that cut the position a little bit. Similar situation as Microsoft. So there are still some super investors buying Amazon, but that doesn't mean that I'm interested in buying it. It's just too expensive for my taste at this point. So that's it, guys. I just wanted to give you kind of an overview of what Robinhood investors have been doing in the last week. And just want to reiterate, if there were one or two companies from this list that I would dive deeper into, the first one is clearly Antero Midstream, a natural gas producer. Very promising numbers here from Antero Midstream. And then NEO, I'm putting on my watch list. It's interesting. I'm not going to do anything with it until it's profitable. But there is potential for it to become the Tesla of China, which obviously, it would have a lot of upside if it was able to execute on its growth plans. So, yeah, that's it for this week, guys. Let me know which of these you're going to take a deeper dive into. If there's any you want me to expand on a little bit more, let me know. I could take a stab at doing a discounted cash flow valuation for one of these companies. And I will see you guys in the next video. Take care.